Tesla had another shocking week, down 7.32% in the last 5 days. It's now down to $219 a share. And as you can expect, the yieldmax TSLA yieldmax ETF is also down around roughly the same, 6.6%, down to $10.20. So there is no surprise that my own synthetic TSLA version that I'm replicating is also down this week, but we did manage to pick up $410 in premium, which we banked. And what we'll do in this video is go through the total returns, all the trades I've made, and then I'm also going to show you where I think Tesla's price prediction is going to be at the end of this week. So if you like the sound of that, all I ask for is that you smash that like button and don't forget to subscribe. So week 3, again, another not so great week for Tesla. But again, because I'm trading a synthetic call option and selling covered calls against the position, I managed to double dip again and pick up more premium than the estimated premium. So we go and have a look at the covered call first. You guys will remember that I sold the 242.50 covered call at $371. So in the last video, we had $371, which was the estimate. And what I did a few days later on the 10th of January, I bought that back for $80 and rolled my call down from 242.50 to 240 for another $124 in premium. And as expected, Tesla continued to decline into the Friday. So I was able to buy this back for $1, therefore netting me an additional, if we add all this together, plus that, an additional $41 on top of the original 371 that I decided to sell at the beginning of week 3. So again, using that double dipping strategy, trying to be more active and not just settle for the 371, which again, I banked pretty much majority of it, by the Tuesday, Wednesday, and therefore trying to be more active in the market to get some more premium. So that's how we can use a covered call strategy to minimize losses, because as the stock goes down, your covered call effectively gains realized gains, which is what we collected this week. So week 1, just to set ourselves, we got some appreciation of the shares for the first time, and then ever since then it has been dropping week over week. And if we head over to the Tesla chart, this bar here on the hour chart is when I kind of roughly started on the 22nd of December. And you can see here that we had this little move up, which was effectively, we managed to grab some appreciation in the first week of $642. And then since then, it has tanked all the way down. And if we have a look at how much Tesla's down by, let's just be nice to ourselves and we'll take the low of this bar over here and we go all the way down to roughly the end. You can see it's down 14.77% since I started, and you'll see here that without dividends we are down about 13%, so roughly the same, you can say. And again, this isn't taking into account the dividends that we've sold so far for this week. So if we take the first 3 weeks results, you can see here we made a total of just under $1,400, which again is still money that we put in our pocket, right? Despite being down 13%, because I'm withdrawing this money and using it as cash flow, we are down 13% on the overall position. If I was to reinvest this money into the market, and therefore will only be down 10%. So we calculated that Tesla was, since I started, was roughly down 14.5 to 15%. And that covered call income has managed to crawl back 5% of that, which again is this $933, which is the total covered call income we've collected since the beginning. So that's kind of where we are from a position point of view. And what we did with the synthetic is that, you guys remember, we have the 240 synthetic, and then, Tesla, I don't know, I can't remember now where it was. Tesla we had the 240, so we roughly were around the 240 mark on the Monday, and then ever since then it just kept going down and netted at 218.89. So again, when I bought these two options back, You can see here that my realized loss on that position was just another $2,000 loss. Last week, it was a $1,000 loss. So my worst so far since I've started this challenge. So again, I decided to close out and reestablish again. And I reestablished at the 50, which was the kind of closest I could get to around the 218 strike when I bought the synthetic call strike. So we got the 217.50 and I sold the 222.50 covered call or naked call, however you want to put it, for $325 or $324 when you net out commission. So again, this is the premium that we've collected. Sorry, that should be $324, which again is going to net us $3.24, which is 1.2% return on our current capital, where we started with 30,000. It's now worth 27,000. And again, that's estimate based on, again, if Tesla continues to trade flat or slightly down, we can potentially roll this down and out to the synthetic call strike of 217.50 to pick up some more premium. Again, this is the worst case scenario. Best case could be, $50 to $100 more on top of that. So hopefully we're going to see a bit of a uptick, at least in the short term, for Tesla. And let's go and have a look at the chart on why I think that is. So there's kind of two reasons. One, the easiest one is that, we are oversold. Again, this is on the hour time frame. If we look on the 4 hour, you can see here we're starting to get in that oversold territory. It's quite an aggressive move down. So again, I'm expecting Tesla to flat or even slightly pull up slightly. So that's the first thing. So we are pulling into the sold territory. And you can see here the last 2 times on the 4 hour chart that I got oversold in this area. See a pullback in this area, did go back down a slightly bit more, but eventually you do see that upturn there. So we might see one with now going into the oversold territory. The second reason is the weekly pivot. So again, if you guys are new to my channel and how I kind of, read charts and things, is I'm a big fan of pivot points. So I like to have the monthly and the weekly. So the monthly pivot in January has already been hit. So I've kind of taken that off for visual representation purposes. And I'm just showing you the weekly pivots out here. So you can see here that this weekly, this one, this one, this is a miss. All of these weekly pivots were hit on the week it was created. And when you have a missed pivot level over here, you'll see 1, 2, it took 3 weeks for price to get to that pivot level. And you can see here that even with over here, it likes to use it as natural support and resistance level. The last week's pivot was a classic example of where we saw price come down, consolidate, go up to the pivot, use it as resistance, and then go back down. So next week's pivot will not show until the market opens, which I believe Monday is a Martin Luther King's Day. So I don't think the market's open on Monday and it's open on Tuesday. However, we do know that the pivot calculation that I've used is just the high plus the low plus the close divided by 3. So when you take the weekly bar and take the high, low, and close and divide it by 3, it roughly works out around the 225 mark. So if we go back to where I've set my covered call, I've put it underneath the 225 because I did want to capture the premium. But I'm quite confident that it's going to get to 222 or 225. It may not reverse. It may do what it's done here, goes back up here, and then comes back down. So what I need to do is I need to make sure that I've got my alert set, that if it does go back into this territory here, then I should be inside a good place because I've got the 217.50 synthetic. So again, if it gets to the 225, which is my 222, sorry. So if I just do that very quickly, 2.5 minus 217.5. Again, that is a $5 gap, which again is a potential $500 return there that I can bring back into the market here. So that's kind of what I'm looking for. That's kind of where my prediction is. I don't know where it's going to continue to make another low at the end of the week. but I'm expecting some sort of a pullback over here. And again, we do have a missed pivot over here, which again, it has been 1 week since this level. And again, if we go back slightly, this has been hit. So again, we might start to see some support at this pivot point here at 215 potentially. So again, I'm not expecting a full reversal. What I really would like it to do is at least get to this level over here, and therefore I can reestablish the position, or at least close out the position for the rest of the week and reestablish on Friday where the next pivot level is going to be. So that's kind of where my head's at. If this trend's going to continue, it needs to pull back before it pulls another leg down. So where my head's at is if we can get it to this level. And again, I am not I've got no issue in doing a synthetic put, i.e. where I make money if the stock goes down as opposed to goes up, which is just the opposite of what I'm doing. So I was debating whether to do that for this week, but the reason I didn't, again, is we talked about the oversold. Pivot is above the current price today, so that is why I've gone with a bullish stance for this particular week. And again, if it does do that and continues to drop down, maybe then I will look to do a synthetic, look to trail this down. Because again, it would have worked for me the last 2 weeks, but no, my luck is the week I do it, the week the market rallies. So let's stick with the game plan of what we have. And again, still making money, right? Still making money, still taking money out of this. And again, hopefully we're going to bank another $300 to $400 this week. So again, really hope you like this video. Any questions, comment down below, like and subscribe, and I shall see you guys in the next one.